Ladies and gentlemen, I had to cut this video into two pieces, this presentation into two pieces, because the system just shut down on me arbitrarily like that. So what we have done before discusses some theory behind the payroll. I will look at the non-statutory deductions. So to continue with this exercise, we're going to be looking now at the statutory deductions. Let me quickly put in the data for the non-statutory. We had life insurance, 2,400. We had the surgical loan for 12,000. You probably purchased a car, 2,300 for your health insurance. Your student's loan is 8,000. And your First Heritage Cooperative Credit Union deduction, savings, 5,000. So your net pay is now at 73,300, and we have not yet done the statutory deductions. So to continue, here are our statutory deductions. We have our NIS, NHT, EdTax, and PAYE. We're going to start with the easiest one first, which would be the NHT. And if you recall from the previous recording, NHT was set at 2% for the employee and 3% for the employer. And it is based on the taxable pay. Now, the taxable pay for Mary Stokes is not 113,000. So let's work out what that gross taxable pay is. The gross taxable pay is made up of the taxable emoluments or earnings, and we only have two, the basic pay and the overtime. So the NHT will not be calculated against the meal allowance, so we exclude it in working out the gross taxable pay. So to continue, NHT is 2% multiplied by 110, and we're using all formulae. For the employer, it's 3% times the taxable pay. Okay, that completes NHT. So we have 2% or $2,200 as deductions for Mary, and the employer has to match his percentage of 3%, which puts his contribution, not deduction. The employers do not make deductions, they make contributions. That figure is $3,300. Now, the next deduction we're going to work out is the NIS. But before we do the NIS, we have to work out what the ceiling was. You remember I mentioned that the NIS was 2.25%, and the employer's portion was 3.5%. But these figures are based on are restricted, or there's a condition called a ceiling. Now, the NIS, the taxable pay, as far as NIS is concerned, let's put that in. For the year, and I had mentioned it was 1,500,000. So let's put in our comma so we can see the figure clearly. What we therefore have to do is to work out what the monthly figure is and what the fortnightly figure is of the ceiling, because these figures will be used in the computation or in creating the formula for the NIS. So we're going to take the 1.5 million and divide it by 12 to find out what the monthly ceiling figure is, and the fortnightly amount. We're going to take this and multiply it by 24. There are 52 weeks in the year. When we have that, it's 26. So we're going to divide the figure by 26. So it means that the maximum NIS that anyone can pay who is monthly paid is 125,000 times 2.25%. 2.25%, F30 divided by 12. This figure does not look right. Let's try this again. 2 points, let's change that, equals this times 2.25%. Oh, the figure has gone to 3. That's why it looks weird. So the figure is actually 3%. My bad. 3% and 3%. The values that I was putting in was for a tax. So let's just put that in to sort of clear the misunderstanding. Because that's one where the figure looks so weird. Okay, so now we're back to we're back on track. Let me just make an adjustment on the formula. Okay, so the ceiling for the NIS, that's where we were. Multiplying this by 3% is 3,750. And for the fortnightly employee, the maximum that should be charged on their salary is $1,730.77. So let's now look at how we're going to compute the NIS. We're going to be using what is called if function. And with if functions, we start off with equal, if, and an open bracket. Now, the typical if function has 3 sections. It has a test, the answer if the test is true, and what to put if the test is false. Now, let us apply it to the NIS now. Now, the reason why I'm using if function, not a straight calculation, a straight formula, is because of this conditionality of the ceiling, of you not charging more than $3,750 for the monthly employee and $1,730.77 for the fortnightly person. So the if function will say for the NIS, check to see if 3% of the, what 3% of the taxable income is. That's a test. Check to see what is the 3% of the taxable income. Okay, that's a test. Now, if 3% of the taxable income, okay, let's start over. If 3% of the taxable income, test it and see if it is greater than 3,570. That's a test. So you're going to tell the computer for the test, take 3%, find the taxable pay, multiply them, and we want to see if the figure is bigger than 3,750, which is a ceiling. That's a test. Now, what do you want the computer to put in this space if the test is true? If the test is true and the figure is bigger than 3,750, you want to put back 3,750 in this space. If, however, you do the test and the figure is not bigger than 3,750, then you're going to tell the system, calculate what that figure is and put it in the space. Okay, so let's review. For the NIS if function, it has 3 elements: a test, what to put in the cell if the test is true, what to put in the space if the test is false. The test is, you're going to tell the computer, take 3% and multiply it by this taxable income and check if the figure is bigger than the ceiling. If it is bigger than the ceiling, put the ceiling figure of $3,750. If it is less than the ceiling, then calculate what that figure is and put it there. So let's do the if function here. Equal if, open bracket, 3% times the taxable income, comma, that's a test, no, greater than 3,750, comma. So that's the test, 3% multiplied by the taxable income. So I want to bracket this so the system knows that that in itself is one figure. Now when you do the test, you're going to say, okay, if the figure is bigger than 3,750, we can't go any further. The tax law says we can't make the figure any bigger. But if the figure is less, then go back into the space and calculate what that figure is and put it there. So what the if function has given me is that the taxable figure gives me an NIS of $3,300. Now if I move this to 150,000, I get the ceiling figure of 3,750 because apparently this 160,000 exceeds the 125,000. Let's put 115,000. The ceiling is still 3,750. Let us put 114,000. And now it is calculating the actual figure because the 3% of this 124 is less than the 3,750. So the system goes back, calculates the actual figure and puts it in. Let's put this back at 100,000. So essentially what this is telling us is that Mary Stokes is earning less than $110,000 in terms of her taxable income. So for the employer, it's the exact figure, so we're not going to stress ourselves out. We're just going to copy. So I put equal sign and I just pick up cell I-12, which is this. Now the next computation I'm going to be doing is ETAX. And ETAX, you cannot calculate ETAX until you've calculated the NIS, because the ETAX deals with what is called the statutory income. So the NIS, the ETAX uses the statutory income as its base. What is the statutory income? It is equal to your taxable pay minus your NIS minus your pension. And that is your statutory taxable income. So it is calculated for the purpose of the ETAX. So it will be your taxable pay of 110,000 minus your NIS, which you're going to just go and pick up from the cell I-12, minus your pension, which is coming from I-16. So that becomes your statutory income. So the ETAX is going to be 2.25% multiplied by the statutory income. Likewise, the employer's contribution is going to be 3.5% of that same statutory income. So notice how the base is different for each of these computations. For the NHT, the base was the taxable pay. For NIS, the base was also the taxable pay, but there was a restriction, some condition, a ceiling, and we had to determine that ceiling, which we determined to be $3,750 for the month. When we're going to be doing the fortnightly salary on the next worksheet. In fact, let me make sure to save this. I'm sorry, I'm just saving the payroll tab. Okay, just want to stop and save because I didn't, and that was dangerous. All right, so we're doing the monthly pay slip right now, and then we'll be doing the fortnightly pay slip in a little while. All right, so the NIS, its base is the gross taxable pay with the condition of the ceiling. The NHT, its base is the gross taxable pay, just straight. The ed tax uses the statutory income as its base, and so too does the PAYE. So too does the PAYE. Now remember, the employee pays PAYE and the employer pays HART at 3%. So let us quickly work the figure for HART, and it is 3% of the taxable income. So it's a straightforward calculation with no conditions. So far, we have an employer's contribution figure. Okay, so we're going to deal with that in a moment. Let me move the pension because I want to see what the total is for the employer's contributions. And the figure comes to $18,284.50. Let me take out the pension because it is distorting the figure. Let me put the pension down here. Because the pension is not a statutory deduction. It is not. Okay, so the statutory deductions for the employer's contribution figure is, the match is $13,284. So now we come to the big one, PAYE. I remember one month I saw my tax and I cried. I didn't plan to, but I just felt the tears. Oh, it can be hard when you work so hard for your money and the government takes a big chunk out of it. But that's the way it is. Now, the PAYE also uses the statutory income. As its base, along with the tax threshold. We refer to it sometimes as a tax-free pay. Now, this tax-free pay is equal to, and don't mix the figures up, 1,500,000 and the 96. I don't know what is the basis of using that $96 at the end of it, but it's there. So again, we have to look at, this is the tax-free figure for annual. We're going to have to look at it from the monthly perspective and the fortnightly amount. So we just simply divide by 12 to get the monthly figure, which is $125,008, and we divide by 26. It's 26 fortnights in the year, divided by 26, and that is the fortnightly figure. Now, what's the purpose of this? We're also going to be using if functions to do the PAYE. And this is the PAYE's if function. It follows the same as we did a while ago, where you start off with equal if opening bracket. We have a test section separated from a true section by a comma, and a false section also separated by a comma. Now, what is going to be our test? We are going to tell the system to, let's see if I can simplify. Let's try and simplify this function. The base on which the percentage is 25%, the base on which the 25% applies. Let us calculate that base down here to simplify the if function. So remember I said that the PAYE uses the statutory income less the tax-free pay. So the base to calculate the PAYE is formed in this way. It is the statutory income less the tax-free pay. The statutory income we worked out a while ago, so I'm just going to borrow the figure. And remember, it takes out the NIS and the pension. And we're going to deduct from this now the monthly amount. Now notice that we're ending up with a negative figure, which means that Mary Stokes will not be paying PAYE. Her salary is too low. So because the base for the PAYE calculation is negative, it means that we don't anticipate that Mary Stokes will pay any PAYE. But let us do the if function for it, because remember we're going to be using what if analysis to play around with the figures. All right, so it's 22 minutes into our video. Let's get going. So the if function says equal if, open bracket. If this figure that we've calculated is greater than 0, then what we're going to do, that is a test, check if this figure is greater than 0. If it is greater than 0, we'll take that figure and multiply it by 25%. But if the figure is not greater than 0, if it's less than 0, meaning it's negative, just put a 0 in the space. That is going to be the if function. All right, so we have it in the wrong place. Let's go up to our PAYE cell and do it over. Equal if. If this figure is greater than 0, okay, that's a test. Then go back to this cell and multiply it by 25% and put the figure in this space for the PAYE. If, however, the cell E46 is less than 0, meaning it's negative, then simply put a 0 because there's nothing to calculate. So you can see for Mary Stokes, there's nothing to calculate. Let's bump up her salary to 200,000. So when you bump her salary up to 200,000, apart from an increase in all the other statutories, she's now paying PAYE. Let's put it back to the original. Good. So what is her net pay? She would have earned in January $113,000. Her payslip will show deductions of $47,375.75. So she will go home with $65,625. So remember now, she has to pay rent. She has to pay rent, bus fare, If she didn't buy a car with this loan, it's bus fare, food, hairdo, nails, and for the men you have to go to the barber. And so don't even talk about if you have kids. So what this is telling me is that if you go to a job interview, okay, and you go and tell them that you want $100,000, knowing full well, okay, let's play with this. Let's, for argument's sake, take these out. If you go to a job interview and tell them that you want a basic salary, gross, of $100,000, it means that you're going to go home with $92,000. Okay? Now, if you, when you did your your living expenses, etc., and it came to $150,000, you know that you cannot ask for a basic pay of $100,000 because it is going to run you less than your living expenses. Now, I am going to introduce you to something called what if analysis. And if you're looking on the data, you will see it popping up here, what if analysis, and we're going to be using goal seek. Let's go over that again. We're now into the second leg of this Excel sheet, of this lab. We're going to look at a situation where you're facing an interviewer. They're asking you, what salary are you interested in? You know that your take-home pay is has to be 120,000. So you cannot ask for 100,000. Let's see if 150,000 will help you. Okay, 150,000 when taxed will give you 134,000. But supposing your take-home needs to be 150,000. Supposing this figure needs to be 150,000. It means that you have to play around with the basic pay to decide what amount is going to give me 150,000 as my net pay. And the easiest way to do that is to use what if analysis. Now, how do you access what if analysis? You go to data on your menu bar on Excel, and then you go into your what if function. There's a drop down arrow. We click on it and we go to goal seek. Let me move this little box over here. Goal seek, I'm going to demonstrate how it works. It has three things you need to feed into it: a set cell, to value, and by changing cell. I want to set this cell, okay? And I want to set it to $150,000. So the set cell asks you to locate a particular cell on your worksheet, and the to value wants you to tell the computer what value do you want to be, what value do you want to put in that cell, what value do you want to see in that cell. And the last thing it asks you, which figure do you want me to change up to give you the 150 down here? And I want to change this cell. I click on a little drop down to accept, and I tell it okay. And within a second, it tells you that you must ask for $171,697.70 if you want to take home 150. Let's do it again. Supposing instead you want it to be 200,000. You want this net pay to be 200,000. Let's go back to what if analysis, goal seek. So what are we going to do? We're going to set this cell. We want it to be 200,000. And we want the system to play with this cell. Let's accept it. So goal seek says Let's click OK to accept the data. Goal Seek says that you need to ask for $242,000 in order to take home $200,000. So Goal Seek is very helpful in this situation where you are facing an interviewer who you know is going to ask you how much money do you want to take home. Now, when you're doing budgets, it also has value there, because when you're doing a budget, you want to see, when I change a particular expense by this percent, how much does my profit change by? This is called sensitivity analysis. So what if scenarios help you in your sensitivity analysis assessments of your financial data? So it has various applications in business, but for our purpose, I'm showing you how we can use it as a student going in to face a job interview in a few months. Okay, so let me see if I can undo. Okay, so let's put back the 100,000. Okay, so this is the payslip. So this section is the payslip. That section is the payslip. Of course, you will have more data on it, like you'll have a running balance of any loan that you have. Your running balance, meaning that a year-to-date balance is computed every month to show you how much you've earned for the period, what sort of deductions you have for the period, if you have any outstanding loans, what the balance is. But I wanted to put this as a side, because the last thing we're going to do now is to compute or to create a journal. Now, a lot of businesses, the accounting information system that they have is normally not a Jamaican or a locally created one. And so if you buy, for example, QuickBooks or Peachtree, these are US-based or Canadian-based software. And so the payroll is not designed to deal with these computations. So what do businesses do? They have a second package that deals with the payroll. And in Jamaica, a popular one is BizPay. It's an online payroll package, and I use it sometimes. And the BizPay, what it does is it does your computations, and out of the reports that are generated, you build a journal entry. So out of this separate external payroll system, you have to do a journal entry. So if the person uses BizPay or if they use Microsoft Excel, the end product must be a journal that you can use now to put into your Peachtree software or put into your QuickBooks software. So we're going to now build the journal from this. All right, so that's the last leg of our instructions. Payroll journal. So in our payroll journal, we're going to have debits and credits. Let's put in our dollar signs. Okay. So for this, we know that we're going to have to debit salaries. Okay. And the salaries, that the debit figure for the salaries is going to come from the earnings. So this figure will constitute the salaries, the basic pay, the meal allowance, and the overtime for all purposes. We're also going to pick up the employer's contributions. Some companies carry a separate line for that, but we can include it with our salaries as well. And so our employer's contribution, let's pick that up, is $13,284.50. There's also the employer's pension. Let's pick that up as well. Because remember, we had excluded it in the first instance to get at the figure for the total statutory contributions. All right, so these are our debits. These are our expenses. The salaries, that is the expenses directly related to the employee. and the employer's portion of the salaries, which is his contribution for statutories and his contributions from the pension. Now, the other element we have would be the net salary payable. And we have our net salary figure. The net salary figure is 65,624.25. Now we have our NIS payable. We have our NHT payable. We have our ed tax payable. We have our heart payable. And we have our other deductions payable. These were like our loans, etc., etc. So we're just trying to keep it simple. I think I want to separate the pension. And let's separate the life insurance payable. So if you're going to be paying monies to these institutions on whose behalf you've deducted money, then you have to go and create payable accounts for them. Let's put other deductions payable. All right, so let's finish up, because you know that whatever the debit total is here, our credits must come back to that same figure. All right. So our NIS payable is made up of two figures. It's made up of the employee's figure and the employer's figure. The NHT payable is made up of the employee's figure and the employer's figure. The education tax payable is made up of the employee's figure and the employer's figure. The PAYE payable, which I left out, let's put it in. The PAYE payable is made up of the employer's deduction only, which is 0. Oh, that's why I left it out. The hard payable, which is the employer's portion. Well, only the employer pays that. The pension payable, which is the $10,000. The life insurance that is payable. For argument's sake, I just want to keep one separate. And then lastly, we have the other deductions. So we have the loan, health insurance, student's loan, and FHC. So this is telling me that I have something missing. Let's see what it is. We have 13, 12. We have that. Let's see what's missing. What's my difference? Oh, this is it. The employee's pension. The employee's pension is what I have not picked up. The employee's pension is what I have not picked up. So we have the full 113,000. Did we take up any pensions payable? 10,000. Yes. Here. Okay. So I need to pick up the employer's contribution separately. Employer's pension of 5,000 as the expense, and also pick it up as liability. So the employee will pay 10 and the employer will pay 5. And so we're good. Okay, so we're finished now with the monthly for Mary's Stokes, and we're going to just copy, and this will be the fortnight, and we're going to call it John Doe. Of course, his NIS figure will be different. Let's change the last digit, and his TRN will be different, and his pay will not be as large. Let's put it at 40,000. And he would probably still get meal allowance. He probably doesn't work any overtime. Let's take out his overtime. Now he will still have NIS, NHT, EdTax, PAYE, pension. He may not have all of these big deductions. So let's reduce his deduction. If it's 2,400 per month, he'll probably pay 1,200 per fortnight. Everything else we will delete. He may have some savings, probably $2,000 per fortnight. Okay. Now notice that the system has automatically calculated deductions for him. However, this figure has to be amended because the ceiling that we're using in the formula is for the monthly paid. The ceiling for fortnightly is 1730.77. So let's change that. Okay, so we have changed the NIS to reflect the fortnightly ceiling. The NHT hasn't changed. The EdTax has not changed. But we also have to change the PAYE as well. Because remember, the PAYE, there's a fortnightly amount of 57,796. So we would have to put in this figure here, minus 57,696. So I'm going to highlight it in red. Highlight this in red and bold. So you'll know what areas will be different for the fortnightly person compared to the monthly. And so the pay. I mean, John still doesn't pay any tax, but at least you have made the deductions for him. And that is it for the fortnightly. So we created the monthly, copied it over to create the fortnightly, and made two changes, for the NIS and the PAY. Okay, so the last thing we're going to do now is to look at loan amortization. So let us go now and find the loan amortization template that comes loaded in to all Excel programs. So I've gone, let's go back and do this. So we go to File, New, and then I'm scrolling down and looking for loan amortization schedule. And I'm looking, and here we are, loan amortization schedule. Let me pin it to the top. And it's disappeared again. So now I've pinned it to the top. Here it is. We click Create. Right, so here we have on screen a loan amortization schedule. And we're going to use it now to create a fictitious loan. And we're going to be able to now see what the different parts of the worksheet, what kind of information it gives. So let's say we're going to be buying a Honda Fit for $1,200,000. That's our loan amount. The banks are having a war right now, and I know of some, I think FHC offers 6.99% interest. And you have up until 10 years. Let's say we do it at 5 years. And you're making 12 payments each month. And you're going to start the loan. Not today. Let us start the loan February. So February will be 02/01/2020. Let's start. 2021. You put the year first, then the month, then the day. Slash. Okay, so here we are. So the loan will start in February. And the loan is for 1.2 million. The interest is 6.99% per year. The loan is for 5 years. And you'll be making monthly payments. So there are 12 payments for the year. Now, there'll be no optional extra payments. Okay. So it means, therefore, on our amortization schedule, we're going to have, this is only showing 10 payments, but you're going to have 12 times 5, 60 payments. Well, let us see what happens so far. Every month you're going to pay $23,000 for that Honda Fit. Notice that the scheduled payments are the same. This tells you that the payment is due February, March, April, May, etc., etc. Of this $23,000, in the first payment for February, the principal payment is $16,765.78. This is what will go towards reducing your loan balance. This, however, is interest. So every month, notice that the principal amount gets larger and the interest figure gets smaller. The net effect being that the figure is fixed, that comes out of your bank account, that figure is fixed every month. So on this side, it shows you more information about the loan. The monthly scheduled payments, $23,755. It shows that you're making 60 payments. The actual number of payments on the schedule right now is 15. And it means that the bank would have earned off of you $88,762 of interest and 45 cents over the life of the loan. So if we're using National Commercial Bank, we would print off the schedule, keep it on file, and the accountant will know that each month, when the $23,000 is paid out, the figure has to be broken up into these two figures. So I'm just going to do the journal for the first deduction. The payment for principal is $16,765.78. The interest is $6,990. And I'm going to now show you what the journal entry will be. So let us file save this. I'm saving it as a loan amortization schedule. So remember, you're going to have to save your amortization schedule either on your Google Drive, your desktop, a thumb drive, because you are going to need it for your project. So I'm closing out this Excel sheet and I'm going back to my payroll. I'm out by $3,000 here. Why am I? Oh, the pension figure. Okay, so what is my journal to record the repayment of this loan? So the formula is, oh my goodness, you're going to debit the loan, the loan amount, the loan account, NCB loan account. We're going to debit it 16,765.78. That is a debit. We're going to debit loan interest $6,990, and we're going to credit your bank account, because that is where the money is coming from. Let's add these up. 16. Let's add this up. So every month, 23,755.78 comes out of your bank account, but the apportioning differs each month, depending on which month you're in. Okay, well, that concludes the lab. So this would have been the second part of the instructions. So the first part was a half an hour. This next section is going to run around 55 minutes. And so, as I said earlier, it's just that you read through or watch everything, and then when it's time for you now to actually do your part of the assignment, using the data from the project instructions, then you can use this as your template. Okay? Well, all the best, and I wish you all the best for the start of the term. And I will see you on the next recorded lab. Take care.